It's unbelievably easy to be a profitable trader, yet 95% of retail traders still lose money. Why? It's not the strategy. Most strategies, in fact, actually work. The real problem is psychological blocks. Fear, greed, impatience, over-leveraging. These are what destroy accounts, not the charts or not the strategy. In this video, I'm going to show you my edge and how using small positions and no stop loss can work in your favor. Look, so I fucking hate stop losses and I'm never going to use them. Well, not with this particular strategy. Now, how does trading without a stop loss actually become less stressful than trading with a normal traditional stop loss? I'm going to stop yapping and I'm going to get into it. All right, remember this. The market moves up and down. It can either go up or down, 50-50, all right? Those are the two options you have, up or down. Once you realize this, you can become profitable. Let me explain. The problem is most people try and time the markets. What do I mean by this? I mean, they try and pick the absolute top or the absolute bottom of the market where they can place their order and place their stop loss underneath or above. So these people are trying to time the markets and they end up losing a lot of the time. Hence, why 95% of people fail is because these gurus online are teaching them this is the right way to trade. I'm not saying there's a right or wrong way, whatever you find. This is what I've found good and profitable and a hell of a lot less stressful. Let me explain. You can see the market just moves in these waves, up and down and up. When there's a strong move up, it's going to move down, up, down, up, down. It's just moving in these legs, right? If you try and time these markets, you're going to get stopped out a lot of the time. If you ride these waves, aka use such a small position size to the point where you can just wait for your position to be in profit, you can come out on top and actually beat the markets. By using small lot sizes on your account, you'll notice that your equity curve is a lot smoother over the years. This is a 15-year test on 3 pairs. You notice, since we're not using a hard traditional stop loss, the equity curve is decently smooth. If we were using a stop loss, we'd have some winning streaks, loser, winning streak, few losers, winning streak, and you'll see a lot of spiky movement wherever your portfolio is going. No stop loss, very smooth growth over time. Just to prove that I'm not bullshitting you, this is a 15-year test from 2010 to 2025, testing through COVID, Russia, Ukraine, all different types of world events. For this particular test, I was risking 0.25% per trade. That is how little of a position I was using on a 10K account. As the account grew over the 15 years, it ended up bringing a return of 86% annually. This backtest was ran on MetaTrader 4 using Tick Data Suite, and the settings I ran for this test can be found in my Discord. So try it out yourself. I'll leave a link in the description for my bot. How do we ride the markets without killing our accounts? Well, obviously, we have to use tiny lot sizes, very small amounts. We also have to kind of get a close entry where we think it might be reverting. I bet I could find you a strategy that's always in the market and it's always profitable. It'd be using 0.01 lots or something like that, and it'd still beat 95% of traders. How do I know this? If you place a buy order in here with such a small lot size for whatever reason, and you just wait, your account's not going to blow, it's going to come up and you're going to get a nice take profit. If you average into these positions and keep adding, bringing your average price down with you, you can actually get out with a nice profit. Obviously, you wouldn't put a buy here. Well, I mean, you might. And if your lot size is small enough, you're probably going to be fine. Now, obviously, it's stupid to tell you to just buy or sell randomly with a small position size. We need to have some sort of signal or alert telling us where price may be reverting. Let's have a look at the RSI and see how that brings in a confluence for our entries. Let me just put an RSI on the chart to show you guys. Now I can roughly see that when price is oversold or overbought, it may be having that reversion soon. So you can see we're under the level here. Look up the crosshair and we move up. We're above your level over here, come down. Below, don't really move up. You probably would have got out there, to be honest. This is the 4-hour chart. Your entries will be on a lower time frame, but you can see that roughly when the RSI is extended above or below, you're going to have these moves up and down. So just by using the RSI, that instantly gives us way better entries. Let's have a look in the back tester because I'm just going to run a test with completely random buys and sells just to show you guys that this is profitable if you ride the waves. These are the parameters of the test I'm going to run. We are testing on a $10,000 account, small account. We're going to be using a fixed lot size of 0.02, all right? Very small lots. We're going to add onto our trades every 0.5 of the average daily range over the last 60 days. Every time we add, the position size is going to get 1.3 times bigger, thus bringing our average price with us and keeping it close to the actual price. Our profit targets are going to be $5 for a single trade and $5 for if you get in multiple trades at once. Same with $5 for a hedge. Here's my stop loss. It's not a traditional stop loss, but if a position goes into 1.5% of drawdown, I'm going to close off 40% of that position. Right? So we're minimizing our risk, which is just bringing our average price with us. We are going to take some absolutely crazy fucking entries off the 1 hour RSI, and our high trigger will be the 51 and our low will be the 49. Pretty much, if we go below 49 or above 51, which the RSI is pretty much always fucking sitting at, we're going to enter the market. All right, so this is pretty much forever entering the market, entering and leaving the market, and it's just risking a small amount, and its take profits are very close. I'm going to run this in visual mode so you guys can see it actually playing out. I'll do it on a few different pairs as well. We'll look at Euro AUD first. So as you can see, we're always green or always red, meaning we're below or above our RSI levels. So we're always entering the market and we're using a very small lot size. Let me run in slow-mo because we're always in the fucking market. So another confluence which I have is this moving average cross, which we just had here. So RSI is above its level, plus we just had a cross. It's going to enter a sell, and it's going to target $5, which it just did there. Each time these lines hit, it's $5 because I had the multiple trades set as the same take profit as the single trades. So as you can see, we entered our first sell here actually for this move right here, and price moved against us. Our spacer, which I had set to 0.5, added a second sell, third sell, bringing our average price to about here. So when price had that little move back, that's actually $5 overall. Sell, $5, buy, $5, buy, $5. We actually were in a sell there as well, and a sell there, which is another $5. $5. So this is forever in the market with very small lot sizes, and you'll see if price does eventually move far against us, like right here, we're only in 0.25% of drawdown on the entire fucking account after being wrong this whole time. We're not using a hard stop loss. Get out. Now, as I said before, I wouldn't advise just entering the market randomly, which is what it's doing now. However, this is just proving a point that if you use such small lot sizes, you can literally just wait for your positions to be in profit. Right there. We've got a very, very, very far move against us right now. Our first buy was up here. And actually our whole account is in 0.6% of drawdown after this entire move. Nothing crazy, and we come out profitable. So it does work, but there's a lot of rules you need to follow, mainly being using an extremely small position size. The reason I like this strategy so much is because since you're using such small position sizes, your account shouldn't go in that much drawdown. You're not going to be going on these mad losing streaks, taking losses, psychological hits, and I can't lie, another benefit of this approach is I've automated it. My bot pretty much runs for me and does 90% of the lifting. So it's going to calculate the right lot size I need to use over the spacer. It's going to sit, monitor, do drawdown control, enter the market for me when I'm not at my computer. I know that since I've tested 15 years on my actual strategy, not this random shit I'm running. What the fuck was that? I know that I know that my account's going to be safe. It's not going to blow it. Enough of this. I don't know what that crazy spike was, but it's growing over time. I bet I could do it on another pair as well. Let's try AD CAD. It's just forever in the markets, doing its thing. But yeah, this is my trading approach. It's not using a stop loss. Well, it's not using a traditional stop loss. However, it will close out positions to reduce our risk. So I've ran a few tests on a few different pairs. Yeah, I mean, it's some of them are growing money. Some of them are fucking just losing money. But this is just saying, sometimes you can just wait. Obviously, refine the strategy. Don't just fucking randomly enter the market. I've got heaps of other videos on my channel already explaining how to properly backtest, how I ran these thousands of backtests simultaneously. Somehow, they were my least performing videos. Backtesting. You need a fucking backtest. So if you haven't seen that video, I'll leave a link for that below. It's 2 parts. So backtest the strategy, make sure it works in the backtester for at least 10 years. Test through COVID, and then forward test the strategy. I'm not talking about backtesting in this video, right? I've got those videos out there already. That's it for today. If you found this video helpful, drop a like, subscribe, because I got heaps more free videos coming out. I've left important links below to the bot and my Discord where you can find set files I use, as well as free indicators that I use when dollar cost averaging. Off of MQL4, you can use my bot in the backtester for completely free. Test out your own settings, see if you like them. And I've recently found out that FTMO actually allows EAs. So I want to be trying to find a prop firm strategy to run using my bot. If you find an amazing strategy, message me on Discord. I'm keen to make a community around dollar cost averaging. Trade smart, and I'll see you in the next one.